Good early morning, everyone. Welcome to Midwest Market Solutions Insider Commentary. Today is Thursday. It's January the 26th. Thanks for joining us here this morning. We're looking at lower grain prices overnight, just 1 to 2 cents lower in corn and soybeans. Wheat market was lower overnight, but the export sales that just came out were very positive and supportive to the wheat. We've found some bids here and picked up in our pricing structure. Sales for corn, 54.8 million bushels. For beans, 24.5, so not a great number there. And you can see our soybean numbers are starting to slow, but that's a decent corn number. And the wheat was 35.2, the best one of this marketing year. So we are seeing a pickup in the wheat bids. I don't know that it's going to last. There's an Egyptian tender overnight, and we're not going to participate in that. So that's going to be a little negative for this market to have to deal with. But at best case scenario, I think you're looking at two-sided trade in some of the grain markets here today. Weather in Argentina continues to remain dry. We are seeing dry weekend. Next week, chances of some light rain, but no downpours, no heavy flooding expected, and that is going to continue to allow the soybean market to ease back off of its double top highs that we have scored. Now, corn's got some major resistance to overcome as well. We poked our head above it, pulled back below it, and it's still going to act as resistance at that 367.5 area. I think you're going to need again, some more private export sales announcements if you're going to get above this area and continue to stay above it. We've had a good week last week, a good week this week of sales, and ethanol production also a very supportive feature. Now look at the livestock trade today. Cash cattle trade is going to be a supportive feature. We've heard some bids in the plains at 121 all the way up to 124 trade in parts of the country. So I think you're looking at better cash trade. Dress trade last week was 195. I just don't see any way they're going to take anything less than 195 given the blizzard conditions and the feedlots, the muddy conditions they've had to endure. So we're looking at higher money there. That's supportive, of course, to the cattle market. The cold storage was bearish. So you're looking at two-sided trade. Rallies into resistance should be sold by hedgers looking at cattle on Feed Report on Friday showing placements to be as much as 9% above a year ago. So look for rallies to be sold in this cattle market. If you have any questions, contact any of our offices. They'd be glad to assist you with some marketing or trading ideas. This has been Brian Hoops from Midwest Market Solutions. Have a great day of trade. Contact us and set up your account with us today.